How you doing today? Everyone's excited about gold and all sorts of stuff? Yeah, I'm going to talk to you a little bit about gold, but I'm also going to talk about energy metals, because that's where my subscribers are making the money, the big change. So this is gold's ready to cycle higher, because, you know, it's a gold conference. Of course I'm going to talk about that. You've probably seen ads from me that they keep putting up quite nicely, saying uncommon wisdom and then resource millionaire. The problem is, I work for Weiss Research, and they liked what I was doing with my gold service so much, they want me to run their other gold service. So they folded uncommon wisdom into the Edelson Institute, and I'm now running Gold Mining Millionaire, and then I transmogrified my gold service into something called Supercycle Investor, because I made a very passionate case for energy metals and the supercycle there. And so they said, okay, you can do that. And at the same time, they liked my presentation on marijuana stocks, so I do that too. So, you know, they all have potential and all that stuff, and we're getting going, so we better start. All right, nothing wrong with gold. It's a great thing to have. Those little nuggets there actually are earrings that were found in a tomb of a Wari princess. And the thing about the Wari is they lived in South America, and at the time, their capital city was the size of Paris at its peak. But we know absolutely nothing about them because they completely disappeared. The earrings last, though, because they're made of gold. Gold lasts forever. That's why we all like it, right? And it's the store of value. It's just fantastic. And the more corrupt the financial system becomes, then the more appeal gold has. And we'll get into that a little bit, too. And gold miners, they're leveraged to gold. And so they can do a lot better than gold in bull markets. There is a new gold in, there is a new bull market in gold and miners. It's just getting started. Gold is cyclical. I'm a cycles person anyway. That's one reason Weiss likes me. Gold is in regular bull and bear markets. Up on the screen, you can see a little of what I'm talking about. No, it doesn't work either. Okay. So anyway, that's all right. We don't need it. But it goes into bull and bear markets. And at the beginning of 2016, it went into another bull market. Now it's had its ups and downs, kind of slept for a while since March. But, you know, it's in a bull market. And so that means pullbacks can be bought. And this bull market, if it's like the other bull markets that we've seen in the past, should last for years to come. Here's another bull market chart that I've shown my subscribers. It's kind of a blow up of that last one we saw, just intersection. This shows gold weekly, and it was in a down channel for a long time, but then it started going higher in 2016, and it only just recently, in the last month, broke that down channel. It's snoozing a little bit now. I believe it's going higher, and I'll explain when I think that could happen. But the downtrend is broken, and that opens the door for the stage of the next stage of this next big bull market. We also saw the Golden Cross. I don't know how many of you folks are into technical analysis. This is something that gets technical analysts just all sorts of excited, because it's when the 50-day moving average crosses above the 200-day moving average. And what is that? That's really like a sentiment indicator. It just shows that in the shorter term, things are looking more bullish. People are more short-term excited about gold, that's all. But the last time this happened, we had a tremendous rally in gold. And so now it's happening again. That tends to make technical analysts think that gold has a lot further to go. And here's the thing about miners. As gold fell, miners got fed into the shredder. They were just pounded down flat and turned into paste. And so we have seen a new rally start in the bull market, like I told you about. But gold still hasn't recovered its heights. That's why it's so great to buy it now, because it's so cheap. It's still down 14% from its peaks. But miners are still down 60%. So they are dirt cheap, at least those with good prospects, those that know how to have a well-run company, those with some blue sky exploration. Those can do very well. Not all gold miners do well. Not all gold explorers and developers do well, that's for sure, but the right ones can do extraordinarily well. So let's talk about supply for a little bit. these are charts you can find elsewhere. This one's from Bloomberg. It shows gold discoveries dropped 85% in 10 years. And this is even though companies are spending more on gold exploration. Why is that? Because the big ones have been found. One of my favorite projects, which I used to pound the table about all the time, finally got bought out. That was Caspiche down in Chile. And that's a project that gold miners used to drive over to get to other gold projects. So why'd they finally do Caspiche? Because they ran out of the nice rich ones, and so they went for that one. It was still huge. It was the biggest one in the Western Hemisphere. Of course that was going to get bought out. And I like stocks with that kind of unique appeal. They have something interesting about them that makes them stand out from a crowd, because there are a lot of companies. So you better have something interesting about your company that really makes it work. So going back to the slide, gold is a non-renewable resource. As you dig it out of the ground, it goes away. It does get stored, but you know, you can't renew that resource, so you have to find new resources, and they're finding less and less all the time. Drop in discovery squeezes supplies. We've hit peak gold. That came shortly after peak discovery, which we previously hit. Again, you can find these charts elsewhere. And so 2016 mine production was flat. Years of low gold prices crushed exploration spending and new mine development, and there are fewer discoveries to be made. And then this is what's happening to gold miners' reserves. This is a survey of the biggest gold miners in the world, and it shows their global reserves. I'm pretty sure you can spot that trend. Now, this is good for the small companies that you've seen here at this conference, because where are they going to get the next projects to fill that pipeline? They're going to buy them. They have big, fat treasuries. Of course they're going to buy them. And the small companies doing the hard work now will be the beneficiaries. Let's talk about demand. Now, I think there's going to be more demand for gold, and I don't have this in the presentation only because it's happened in the last week, but simply because of what's going on with Bitcoin. And I don't know if you're paying any attention to this, but I think some of the rally potential for gold was actually sucked away by Bitcoin over the last year or so, because when Chinese businessmen and politicians want to get money out of their country, what they used to do was convert it to gold and then put it in a suitcase and take it over the border. Then they found Bitcoin. That made it so much simpler when you can just transfer your money into an exchange and it's convertible and all that stuff. And that took some of the oomph out of gold. But now the Chinese government is cracking down on that, even though the Chinese legislature is made up entirely of billionaires who all made their money by illegal means. They want to hang somebody. So they are cracking down on the Bitcoin exchanges, and it's a slow process, but they'll end convertibility into the exchanges October 31st. That could be an important date. We'll have to see how that goes. But that's the announcement so far. And then they wonder what will happen next. So you can still buy Bitcoin over the counter, but what's the point of an electronic currency if that's what you have to do? So I think that the Chinese might go back more so to the old method that worked for Granddad, which is to convert your money into gold and hoof it over the border. So we'll have to see how that works out. But I think that the squeeze on Bitcoin could work to gold's advantage, especially if other governments follow China's example. Now, politicians all over the world are corrupt, and I'm sure many of them are using Bitcoin the same way that the Chinese politicians are. So what are the chances of that happening? I don't know, but no one thought China would do this either, because I can bet you some of the biggest Bitcoin holders are in the Chinese government. But they're cracking down anyway, and somebody's going to get hanged. So we'll see how that goes. But think of that, is that there has been a major competitor for gold, which now seems to be changing. And when that kind of shift happens, that's something you want to pay attention to. And so here's a big bull market force, which is that China, again, and I'll keep coming back to China because it figures into a lot of the stuff I write. But China's middle class will swell from 300 million people to 550 million people in about a 6-year span. And that's nearly 200 million more people than we have in the US. And if you're saying, how is that possible? Well, if you look at the circle on that map, there's more people inside that circle than there are out of it. That shows how much of an effect that portion of the world can have on the rest of us, right? And outside of India and China, there's another 650 million people spread across Southeast Asia. And so it's a booming middle class with a cultural affinity for gold. So yeah, that is something that can really light a fire under gold prices. Central banks buy the barbarous relic. We don't have the latest numbers in, and it seems to be slowing down, but they're still buying it. They're still net purchasers, led by countries like Russia. You wonder what they know, right? But they are buying a lot of gold, and part of it is foreign central banks want out of US dollar tyranny. You people in Canada may not be aware of this, and many Americans are not aware of this, but the US government uses its currency like a club. And so when we impose economic sanctions on a country, and it gets very difficult for them to trade, you know, they are going to look for options. And so, so some of the options they are talking about is maybe converting to something backed by the Chinese currency and stuff like that. But whatever you do, it's going to have to have some part of a gold backing. That's just because otherwise people won't trust it. Also, U.S. debt is unsustainable, and again, I don't know how many people of you here are from Canada and how many from the U.S., but really, it's like living in crazy town down there. I mean, what they do with the debt is just nuts, and they keep wanting bigger and better and more expensive things, and yet they don't want to raise taxes to pay for them. I would be fine having low taxes as long as we can cut spending. Apparently, that's impossible, and yet this is my government. So, at some point, those debts will be called in. And the only way to deal with that is to print money. What can't you print? You can't print gold. And that's going to make gold look very, very good. Now I want to shift a little bit to talk about short-term forces and bring up something that hasn't really been addressed by the other speakers here. And that's what I'm hearing from the ETF holdings of gold and silver. And in the very short term, gold holdings in the ETF are going up. That is, physical gold ETFs, people are adding more and more to it. At the same time, silver is dropping off. Those people that hold silver in ETFs are shedding it rather quickly. This is not being reflected in the price so much, but it's happening. So what's going on here? I think that this is part of Main Street's bearishness on precious metals, whereas Wall Street can see what's happening and they want to own gold. So this is something that could play out. How could it play out? Well, right now we're seeing the gold-silver ratio fall, which means that gold is becoming less expensive in silver terms. But if we start to see a rally, I think the rally could be led by gold. We're often used to it being led by silver because silver often acts like gold on steroids, right? Or crazy pills. I mean, because when gold goes in one direction, silver always overdoes it. And then when gold goes in the other direction, silver just ramps up, really goes berserk. This time around, I think gold could really lead the way. And so that's what the recommendations I'll be making to my subscribers. The next bottom I think we could see in gold could be this next week, going into the US Fed meeting, or else late in October, which is when we could see some action out of China on Bitcoin. But it's always hard to pick bottoms. It's much better to pick great stocks. That's really what I concentrate on. 60 seconds of politics. I've touched on this a little bit. I expect President Trump to serve 2 terms, simply because the opposition party can't walk down the hallway without tripping over the wallpaper. Now, he would rather be golfing, but we should look for his policies to stay in place, which is weak government, corporate strength, low growth, tax cuts is a cure for everything, and tax cuts don't cure everything, and a weak dollar policy. He likes that. He does. And so what's priced in US dollars and tends to go in the other way? Gold. Yeah, I call it the seesaw of pain. When one goes up, the other goes down. So shorter-term forces in gold. Investor demand. It's the single most important short-term swing force in gold, especially gold ETF demand. Negative real interest rates. We've had previous speakers speak on that, so I'll just leave it to them. They made very good points. Political instability, not only in America, but around the world. And the potential for a global financial crisis. China's heating up into a debt bubble the size of the Hindenburg, and there's more than that. We at Weiss like to talk about negative things. People think we're doommeisters. We're not. We just like to be prepared for everything so that when the stuff does hit the fan, maybe we'll be able to handle it a little better than some others. And the US dollar seems to have peaked, at least in the short term. I believe there are forces at work that will make the US US dollar will look more attractive, but that's probably coming later this year or maybe early next year. Global inflation expectations, they hit a peak in March. They've since backed off. And so inflation expectations are becoming less severe. And as inflation went up, gold went up. Now that it's backed off, gold's come down. What's going to happen next? I think inflation expectations will go up, and I think gold will go up with it. So, two picks in precious metals. One is Northern Vertex, and I'll introduce someone from Northern Vertex in just a little minute. And it's the next gold-silver producer in the US. It has a fully funded mine, which will start commercial production in the fourth quarter in Arizona, which is one of the most mining-friendly areas in the world. It's targeting annual production of 42,000 ounces of gold equivalent per year, all-in cost $662 per ounce, and the project has an after-tax internal rate of return of 48%. Now, here's the thing. Very nice mine. It's only the tip of the iceberg. I've been there. I've looked at the area around there, and there's a lot more to find. I can tell you that. Anyone who looks at it can tell you that, and that's going to be really interesting. The other one is Atlantic Gold. Another producer just started production. I seem to favor these kind of companies because it's also going to be, I believe, this is completely my opinion, the company hasn't said anything, I believe that they'll be raising their resources as well, simply from the drilling they've done on other satellite deposits, so that looks pretty good. And so, perfect storm for gold. Now let's talk about energy metals, just ever so briefly. All right, there is a super cycle in energy metals. This is fed by the electric car megatrend, and I'll toss those terms around however you want. But the fact is, we're seeing a shift now, much like the shift we saw at the beginning of the 20th century when we went from horse and buggies to internal combustion vehicles, or ICE as they're called. And so now we're seeing the trend from internal combustion vehicles to electric cars. And people say, what if there's a big global economic setback? Well, you know what? We had the Great Depression in the 20th century. That didn't stop the transition from horses to internal combustion vehicles. If one thing is more efficient, they will move to it anyway. Demand looks insatiable. There's 14 gigafactories under construction now, and there's going to be much more. These are electric car sales projections, and this was before China came out with its news of last Saturday, which I'll tell you about in a bit. And that in order to feed this, we'd need 35 gigafactories. So we just started with 14, now we've gone to, we'll need at least 35. Let's go up a little bit. On September 9th, China said that the government is working with other regulators on a timetable to end production and sale of internal combustion engines. They haven't announced it yet. That could be another market mover. But I can tell you what that did to the lithium and cobalt stocks in the supercycle investor portfolio. It lit a fire under them, and they started heading higher. Really, really nice. Lithium, it's in all internal, it's in all electric batteries for now. They keep trying to come up with new substitutes. We haven't seen anything commercially produced yet, at least in any way that will work on a commercial basis. But it went up 9.6% in August after a 5% climb in July, and the price has more than doubled in the past 5 years. Cobalt, it looks like it's going to go to the moon. As much as we use lithium in these batteries, we use a heck of a lot more cobalt. And there's only one cobalt mine coming online next year, and yes, my subscribers own it. So the cobalt market's getting tighter and tighter. This is something that can really only be resolved by price. People say, well, that'll make electric cars more expensive. No, because they're getting more efficient at building them, and they're able to use less of these materials. So it's kind of a best of both worlds kind of thing. But there's surging demand for all kinds of metals. Heck, we don't even use copper in the electric batteries, but use 3 times as much copper in an electric car as you do a regular car. So that's going to drive up copper demand too. So copper companies can look really good. So 2 picks, Lithium Americas. Okay, when I first sent the folks at the Metals Investor Forum my presentation, it was up 55%. Then it was 62%. It's up 70-something% now. So you might want to actually wait for a pullback before you buy it, but it is developing one of the best lithium deposits in the world, and it has another one in the US that looks pretty good too. Katanga Mining, that's a cobalt pick, and it owns 75% of the cobalt copper mine that's coming online next year. Now, Glencore owns 86% of Katanga. They'll probably buy the rest, but for now you can buy that stock, and that trades in Canada as well. Edelson Institute.com. If you want the latest version of this, I'm not sure if these guys have it, then just go to the Edelson Institute, find customer service, and ask them to send you Sean's report. I also have a much longer energy metals report, but I have to update that before I send it out. Gold is just the start of our adventure. And now let me use my last 20 seconds to introduce Ken Berry, who is...